Oh man, I've been looking forward to making this video since basically the open when Lori told everyone in the pregame show of our chart guys on YouTube all about CLOV. I'm going to call it CLOV out of habit. It's just going to happen. What I want to do in this video is walk through how the chart guys community looked at CLOV from our pregame show an hour before open to the initial rush of volume to the sell-off to the equilibriums. We're going to walk through I think 3 different trades that we talked about inside the chart community, why we took them, what we were looking at, and how we utilized the charts and technical analysis to our advantage. So what I'm going to do first is I'm going to show you some excerpts from the pregame show where Lori introduced the CLOV setup, discussed why she was interested in it. I may include some of the pregame show I may include some of the excerpts from Dan's comments when he did his initial review in the morning. And then we're going to jump right into price action and we'll explain a few of the different trades that we took. So first, why don't we go take a look at what Lori had to say about CLOV this morning before any of the magic even happened.
Okay, my King of the Mountain trade is literally the most dangerous trade I've ever given out. CLOV to the long side. Now, that doesn't mean you blindly go long, but this has potential for a short squeeze. CLOV is on the list over here. And the option strikes go up to $22. So I think I put 22 on this chart somewhere. There it is, 22. $22 is where the option strike maxes out. Above $22, we got a gamma squeeze. And the amount of volume in this sucker is insane. Last time I checked, we were at 16.5 million, and that was 40 minutes before I went live. So this ain't Sally, Susie, Johnny buying. This is some big buying here. So a pullback to 1462, I would buy it with a full size. Full size not meaning my whole account, but if my day trading size is 5% of my account, I would go in full 5% at 1462 and put my stop at 1450. So CLOV, watch it, be careful with it. And again, I hate that word feel when you're trading. It's not a trader's word, by the way. 1684, and hate's a terrible word. 1684 and 1745, we are that close. That may be that self-fulfilling prophecy on CLOV. Let me see if I can take this a little further. Your next target would be 2048, which is close to that $22. And then 2433. So CLOV, it's going to give us all the volatility you need for an experienced trader. If you're not an experienced trader, take notes. Just take notes. What I see with stuff like this is trying to shove a beach ball down below the water. So this is the beach ball. So y'all just bear with me in my drawings. Okay, that's terrible. But you know what happens when you try to shove a beach ball underwater? What does it do? It pops. So with the amount of shorts that have piled into CLOV, and IWM has to add it. Now they may have added it all yesterday. Let's see, 125 million and normals 30 million. They could have added it all, but be careful shorts on this one, and experienced traders only.
Which is getting some attention after the massive day yesterday. Gap up open this morning. Looking at the range from pre-market, we can see a couple support levels. Let's go to the 5-minute. So support is 16, 1595, and then all the way down to 1462. So looking at this setup, I can say, if I'm a bull, I really want the bulls to hold 1595, because if that level breaks, there's a lot of space before we have another support level anywhere in play. Resistance is 1654 and 1694, and if the bulls were to break those levels, we're then looking up at 1684, 1745 as some key levels on the daily time frame. So certainly not looking for any bullish entries on this gap up open. It would require a pullback, and to be looking for 5-minute oversold conditions, to be looking for an hourly higher low if we were going to be looking for a bullish entry, in my opinion.
All right, let's get into the actual trading, and we'll talk about 3 different trades and the technical analysis that led to their entry and exit. First, daily context. It's important to understand why we are here and where we came from. On the daily time frame, we saw a huge amount of volume yesterday. That's what catches Lori's attention and why she mentioned it in the pregame show. And it's something to note. The fact that we had that many votes of confidence, that big of a candlestick, that much momentum, we're likely to have a big gap up. And we're not really surprised on a 2-minute time frame to see this sort of move pre-market a move all the way up to 1694, build a basis support at 1695, and 16 psychological with a low down at 1462. All these levels are levels that Dan chatted about, and they do come into play. Why? Because if we can hold 1595, that's going to be a vote of confidence for the bulls. If we lose 1595 and we come all the way down, then we're going to be looking for a little bit of a different play. We're going to be looking for some higher lows. In fact, the play that I wanted most of all was a 5-minute oversold bounce, some strong profit taking, catch that bounce, and let that elastic fly back to the upside. Not what happened. It's okay. A part of technical analysis, being responsive to the charts, and that's exactly what we did. So we're going to play through the CLOV chart on the 2-minute time frame using the trading view chart replay feature, and we're going to get started right now. So what we'll do is we will just click through the action as we saw it. So first thing out of the gate, am I really surprised by a big upper wick? Nope, not really. A lot of times when we see an opening range, we see a big push in one direction, a big push in the other direction, and both the bulls and bears are sizing up their opponent. And we're trying to figure out who's capable of what, where is resistance. If we see a bull push and we have a brick wall right at 1695, we're going to say, okay, well, we know that's there. Let's back off a little bit, see if we can consolidate, see if we can chip it away. Talking from the bull's perspective, of course. If we see a strong punch up and a strong punch to the downside, then we know that it's relatively balanced and we get a gauge of the range that we're playing with. So our big move, yes, nice to see, not necessarily a huge vote of confidence yet, but the fact that we get over 1694 is good. Now we're going to look for the bears to have a little bit of an opportunity to push back, and we see that they do, and we let them do their thing. We want to see to what point are the bears able to push the price before the bulls answer back. And this is where things get a little bit interesting. This is all the bears are able to do. Huge push to 1892. The bearish response, although the volume is good, it's relatively normal for open to see volume tapering off relatively quickly here. But the key is we don't really lose at 16 level at all, do we? We don't really come down to challenge it. In fact, we see a little bit of a bull push right back up. And we set a level, I believe it was 1630. That should populate here in a second on our 5th bar. Where is it? There we go. So here we get into our first trade. Now we've got our high and our low range. We've established what the lines in the sand are for the bulls and bears. And we get into a little bit of an equilibrium. An equilibrium is when you have that moment of balance. A push, push back, a lower push, a softer push. Eventually you run out of steam. That compression results in volume being applied to a resistance, and finally something breaks and the price moves generally pretty violently in one direction. So we've got 1892, we've got 1632, we've got 1830. We got this little guy. I'm not really super confident in calling that a higher low yet, but what we can do is go and mark down our 1830 level of resistance and see what happens if we get above that. So this is a level that I am watching. I'm looking for this equilibrium break to take my first trade. Now we get that break. The volume's pretty nice, but I can see that we almost immediately fall back below. So as I'm watching this, I don't have a stop buy set for 1830. When I'm watching these high moving plays, these high volatility plays, I'm not using stop orders or entries. I'll use stop losses for market orders, absolutely, because I got too many kids. I got to look away and I'm going to get into a terrible position. So I'm watching this. I don't stop buy the 1830, but what I do notice is that we maintain a little bit of support here. We don't really have too much doubt yet. We get a 2-minute inside bar. We get another little low. And you know what? I'm okay with this. We've proven ourselves at 1830. I've got a multitude of supports here. What I'm going to do is place an entry and I'm going to stop out at a new 2-minute low. Because if I'm wrong about this, we get a bull break over 1830 and then that just completely fails. Well, then there's no real direction here anyway. And the trade that I was trying to manifest in my mind simply didn't come to pass. And that does happen. It happened to me today on a different stock. It's just the way it goes. So here I am with my entry. I got my stop loss down here at just under 1708 and I'm going to let this go. So we see the volume coming in. That's good. 1830 is not the target. Our target is a new high, big volume, big vote of confidence. So exactly what we wanted to see. We're in the trade. We've got our stop loss here. Now the first thing that I want to do is move my stop loss to break even. I do that whenever I can because it removes all stress from trading. And it is my favorite part of a trade. And that's not true. I like hunting and planning, finding the perfect trade. I like being correct, but I remove all stress when I'm able to put my stop loss at break even. And then I get a little bit of feeling, a little bit of happiness when I'm able to set my stop at a profitable position and know that I've locked in my profits no matter what. So here we are, we're in a good trade. 1892 is our only real resistance, and does it even bother us? Nope, we just keep on plowing through. So we're happy with this. Things are going well, and we're just waiting for the slowdown. We know at some point it's going to come, and what we're going to be doing at this point is watching for these 2-minute higher lows to come into play. We want to give the bulls a bit of an opportunity to consolidate. We expect consolidation, but the volume is being pretty consistent. And if this is our bear candlestick, this is pretty small. 2-minute inside bar, it breaks bearish, no follow through on it, and bulls respond back to the upside. So I am interested in taking profits at this point. It's getting a little bit crazy. I don't have a nice level to stop out against quite yet, but I am also looking at this and saying, this is too good to be true. If I'm happy with the number, I need to be able to take profits. It goes up quickly, and if I believe, if I remember correctly, we hesitated up here for a little bit, and then we saw a pretty quick flush of volume as people started to run to the exits. Someone really tipped the scales, and it was quite a bit of volume that pushed the price down relatively quickly, and then it sort of stagnated. So it was that stagnation that caused me to take my initial profits. So I exited half of my position up here. No other reason than we got a little bit too extended and I just want to be able to lock something in. So I've exited half my position. No idea what's going to come next, right? No one ever does. All we can do is speculate about the most likely outcome. And the fact that our RSI is 91 on the 2-minute time frame, and we're in a beautiful position. Got a week maker out of this, guys. Very happy with it. A huge thank you to Lori for bringing it to my attention. In more ways than one, I don't know where I would be without Lori's help. So here we are. Got her out of her position. We see some bearish volume coming into play. That's quite a bit of volume. We come down. Now what we're trying to do is set a 2-minute higher low. I'm not moving my stop loss up because I want to give the bulls an opportunity here to get that higher low set. We haven't consolidated, right? So we move around. We get a little base of support. Now, what catches my attention at this point is the fact that we have a double bottom at 2070. And as we hang out here, we start to build out a 2-minute bear flag. So a bear flag is when you have a significant move in one direction, and then you consolidate relatively sideways, which we do here. It's more or less a bear flag shape with a clear double bottom for support. So I move my stop loss right there, 2070. I'm going to take profit if we lose that level. But I'm also going to give the bulls the opportunity to defend that, as I have once already before, and see if we can't get a higher low into upside continuation. That's my hope. Unfortunately, it doesn't come to pass. The bears attack, stopped out, and the volume really picked up on that 2070 flush. So now my first trade is complete. I've got my entry over here, my exit up here for half, and stopped out at 2070. A beautiful trade, and it was all based on the overall excitement, the volume, and the fact that we had a perfect little 2-minute equilibrium where the bulls have pushed to the upside, showing their intent. The bears failed to really get much done at all on their first initial attempt into a sideways tightening range, into a big breakout. All right, one of the things that I want to try and do with these videos is show the only evidence really that I can show of the efficacy of the Chart Guys community, and that is the fact that we have these conversations and talk about plays in real time. So as we're talking about and trading CLOV today, this is the conversation that we're having. Here's CLOV outlined 7:30 a.m. We're talking about the equilibrium, talking about the 2-minute time frame. And my friend Barry asks about the trade and say, entered on the EQ break, walking up the stops, already scaled out half. So that was at what time? 7:38. Hopefully that lines up with the story that I showed you guys. Yeah, so we're already out of that. And we set our stop loss, where's the second little post here, stop under 2070. So what I'm trying to do with this is just show you guys that these are levels that we're talking about. We're sharing them in the community. We're talking about them, and we're talking about why they're important, because that is how we learn to trade and how we teach other people to trade. We all get to share our experience and our knowledge. So let's take a look at what Tim did, because Tim made a very beautiful trade. I didn't take this one. This is all Tim. All right, so Tim is looking at this a little bit differently. He didn't catch this run up. Maybe he was doing something better. Maybe some family stuff. Maybe something more important than CLOV. But what matters is he was like a ninja. And I suggested he change his name to Chimjitsu. It didn't take. Maybe he will change his mind later. But what we were looking at this point, still watching the 2-minute time frame, is watching the lack of any sort of bullish response. In fact, we get a 2-minute waterfall down, and we start dipping into 2-minute oversold conditions. So here you can see that 2-minute we ignore the repaint, we're getting close to that 2-minute oversold. So our friend Tim jumps into his trade here at 8.25. He's already taken the CLOV long position, looking for a bounce off an extended 1.236 from the top. So you get filled in the upper 16s, and let's go back to our chart. Now what matters here is that we have an oversold bounce. So how we find and derive and decide to take an oversold bounce, there are many ways to do it. I just watched the price action, didn't take this trade like I said, but if I was going to, what I would look for would be a push as close to that 1632 as possible, and then some volume, which doesn't show up, and then some price action validation. So Tim gets his trade, so he gets his entry right down here, and then we start to see a little bit of a bounce. Now, general rule for the chart, guys, is if you have an oversold bounce, on the time frame of which the bounce is occurring, you're going to look at exiting or scaling out your EMA 12. So that's the blue line here. And I believe Tim says that, yes, out half. I'm sure he meant the 12 EMA or the 2-minute 12 EMA, because that's exactly what he does on CLOV. We see the little bounce. We come up, push, and there is that nice little follow through. Now, these are small trades, but they don't have to be small trades. Why? Because we can use this bounce as a launching point for a new trend. We haven't changed the trend yet, but all we need to do so is to get a 2-minute higher low over top of 1668. So if you are an experienced oversold bounce player, you're going to be watching for that moment when things really start to shift. And you gain that through experience and through doing this many times. But what it does allow you to do is to have your break-even point very close to new lows, which allows you a lot of breathing room for setting higher 2-minute lows in order to develop a new pattern. And that is what we see here. So again, I didn't take this trade. I'm not going to try and take credit for it. But what we do see is the development of a new 2-minute higher low. So again, just like in our other videos, we can start walking up our stops. We're in let's say we are in right at 17. Let's call it 17 psychological. Beautiful low bounce catch. And we're going to try and ride this up. So we're going to stop out at 1752. What happens? We get a new higher low. We're going to move our stop up right here. Keep on going. At what point are we going to get stopped out? Well, maybe we don't. Maybe we do. We're just going to keep building and keep moving. So here's another 2-minute higher low. Beautiful. Now we're going to stop at 1902. You're getting the idea, right? You just keep walking up these stops and allowing the market to make some decisions for you. Here's another 2-minute higher low. We're going to keep doing this. And I'm going to drive this home. And eventually, I know we do dip. So at some point, we are going to get stopped out. And it's looking pretty probable right now. I'm not sure I would have moved the price yet. There we go. Okay, finally. We got stopped out at our theoretical level, 2003. Let's just call it 20 psychological. So that is a really nice trade example. Tim was able to catch. I think he scaled out well before then. In fact, I know he did because he made a couple of flips here, catching the higher lows. The guy's like a wizard with these little micro trends, just scalping all the way up. Absolutely beautiful. But you don't need to do that. In this case, you could have just caught that oversold bounce and ground up the 2-minute higher lows all the way up to 20 psychological. So that is your second trade. It's oversold bounce and using the trend, the 2-minute trend, and waiting for that trend change for some consolidation. Okay. Now we're going to move on to our third trade. But for our third trade on CLOV, things need to get kind of boring and kind of choppy. And I will admit that I got chopped out of a very small trade. It was a taco loss. But at that point, I realized that we're getting some higher highs without much follow through and lower lows without much follow through. And what that means is you get some inside conditions. So let's just chip our way forward. Let's get rid of some of these trend lines because ultimately they don't really matter anymore. We're going to be waiting for these new price action levels to develop. So here's 2063. We get a little break over top of it. Now the question is, do we get any follow through? No, we don't. That's the higher high without follow through that we worry about, that we don't like to see when we're trading price action. What that means is we're generally building an inside bar. An inside bar is just generally, it's a nice way to say you got some sideways consolidation here, man. And you're probably not going to get a lot done inside that range. You're more or less just going sideways. And in fact, we can really visualize that by boxing in our trading for the most part. Let's just go right up here. I know we just peaked over 2138. But this is sort of the point, right? You get a higher high, no follow through. And that's just the way it goes. Things get a little bit boring. In fact, I think we're going to do it again here with a break. I think it was 21.25 we got up to. Well, there's a perfect little top. No, 21.31. That was a level. That's right. Coming back down, there's a 25. All sideways for almost 2 hours. So two things should jump out at you at this point. One, higher highs, lower lows without follow through equals inside bars. Let's go see if we can visualize that. So it looks like our chart replay feature doesn't carry over to other elements of our single chart. But what I wanted to show you here was an hourly inside bar, another hourly inside bar, after we had already had an hourly inside bar with a failed bull break. This equals consolidation. Here's our range. Look at it another way. We're even getting 50-minute inside bars inside hourly bars. That is a lack of follow through. That is what you want to watch for. If you have chops, you want to stop trading. If you're getting higher highs without follow through, you want to stop trading. Are we going to develop a larger time frame inside bar as a consolidation pattern? And in this case, we absolutely do. So we go and mark out what our hourly bars are. Here we go. 21.31 is our hourly resistance, and our support becomes 19.91, and things get a little bit interesting from here. And truth be told, I wasn't even watching this hourly inside bar. I had given up on trading CLOV right before, of course, I decided to make the third trade. And why did I give up on it? Huge profits from earlier today. Didn't want to give any of it up. Already had a loss over here. So let's move on. Now, the reason I got back into this was because volume became very, very attractive. So let's watch this volume down here. We can see immediately on the break at that hourly inside bar, volume starts to come in a pretty big way. And it's even more substantial if we are watching the 1 minute and the 15-second time frame, which I was. So I missed a good entry on this one, saw the volume, and decided to take advantage of that huge increase in volume. My entry was actually not that great. It was 21.80. So I'm going to go plug this value in here because it's important. 21.80 right up here. And of course, we see a little bit of consolidation. And at that point, I probably should have exited, but I allowed the 2-minute bulls to get into a tiny, tiny, tiny little flag. And then we see that upside continuation. Gave me confidence, set my stop immediately at break even. And I allowed the bulls to do their thing. And my goal for this one was just to get a 21.86. So we're going, we're moving, we're holding. And the longer we go sideways at this point, the better for the bulls. So we see our price going sideways. Things start to look a little bit better. We are looking like a bull flag. And I just want to get $1 out of this move. I'm in at 22.80. I want to get out of 22.80. We start to come up. You start to go down, start to go sideways again. It's not exactly doing what I wanted to do, but you know what? I am going to be happy with my trade. And I just jumped out of here at 22.60, locked in another happy little trade. And that was more than I could have asked for going into the end of the day. Now, just watching volume isn't the only way that we could have noticed this trade. So what I want to do is actually show you conversations that took place inside the community. There's two things that are happening here. The 21.98 is a key level. Shout out to Dinsey talking about this one. CLOV trying to break the day, end the day strong with the 21.98 break. And we're talking about it. Here's that little trade that I told you about. And on top of that, where is this thread? Yes, Lori here. At what time? 11:17 a.m. 15-minute equilibrium with a TTM squeeze. Let's go and look at that because that was really important as well. What time was that? So here's that move. Let's finish up the day so we can get a full grasp of what happened. 11:17, right about here. We're already going sideways, squeezing. What does our squeeze look like? What does the TTM indicator tell us? Well, it tells you when price is compressing, and there that is, a beautiful squeeze setup and a big break. So a lot of different factors, all of them really building around the community. And that's the biggest thing that I want to drive home to you guys today. Being a part of the Chart Guys community and having a different, diverse group of individuals with different trading styles and different approaches, all generally speaking the same language about price action. I don't know where I would be without this community. It's absolutely indispensable. So that is it for today on the CLOV video. 3 different trades, 3 different types of setups, one awesome group of people. Hopefully this video is helpful for you and gives you a little bit of insight into how we apply different types of technical analysis to these highly volatile stocks and how we protect our profits.